Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, November 7th at about noon Eastern. Well, stocks are moving lower so far today as tech continues to struggle, putting the major averages on pace for a losing week. The three benchmark indices, and of course you know that already, the Dow, the S&P 500, and the NASDAQ are each red in this week, with losses accumulating on and off since Tuesday when major AI names declined on fears about elevated tech sector valuations. On the flip side, let's find some good news. Some market participants remain hopeful that an end to the lengthy U.S. government shutdown and a potential December interest rate cut from the Federal Reserve could alleviate the pain in U.S. stocks. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we'll look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $661.70, back below, of course, obviously, last week's all-time high at $690, and trading below the 20-day moving average, the red line, which is now coming in at $673. And now, as we speak, it's sliding below, the SPY is sliding below its 50-day moving average, coming in at $664, and the SPY itself, again, is coming in at $661 and $61 and change. Now, we know that earlier this year, if you look left on the chart with me, earlier this year, the market rolled over and the SPY dove to its April 7th low. We all remember that, at about 482. And actually, it was even before this low here. It was back here. You can't see it on this chart. But on that famous April 7th fall, everything fell just about, and the SPY dove to its low at 482. But from there, it rebounded and gradually climbed higher. And remember, this is April right here. So the SPY climbed up off of that low, back over its 20-day, back over its 50-day, and then finally back over its 200-day moving average to walk up for the greater part since April, for the greater part of the year, walked up its 20-day moving average, which is fantastic. And walked up to its high up here at 690, and that from these lows to this high is a 43% gain. But then in the past week or so, the SPY has rolled over to where we are now, back through the 20-day. Now look, guys, markets don't go up forever, believe me. The markets of industrialized nations move in cycles. That's the way the world goes. So we can't say the market isn't going to move up forever, and please God, it won't move down forever. So it did move up here in October. We can see it stayed above the 20-day moving average for the most part. Then in October, it took a little dip here down to the 50-day moving average, but then popped up again as everybody goes, no, this bull market isn't ending. And it probably isn't, but it's very definitely a common process for traders and investors, certainly like me and maybe like you, to take profits. It's just the way it works. So yeah, we're still in a bull market, but we're having a pullback here, and that's totally normal. Now going forward here, if the SPY continues below the 50-day moving average, then that's going to have to be what was support will be resistance potentially. So the 50-day at 664 potentially will be resistance when it starts moving up, 673 at the 20-day, and then again, up here at 690, that will be potential resistance should it start moving up. And it will at some point, but at any rate, if it starts moving up soon. Now, as we break down here, we have potential support Right here we have the October lows. Oh, I'm sorry, down here we have the October lows right here at 653. We have the August pivot at 619 right here. We have the 200-day moving average coming in at about 611, and then on down. So again, pullbacks are a normal process as we all take profits. And as I posted on Twitter or X yesterday, it's not always how much money you make. A lot of times it's also about how much money you don't lose. So please be careful out there. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows our NASDAQ 100 index, which is the top 100 non-financial stocks in the NASDAQ stock market. Of course, and that always includes the Magnificent Seven, the Metas, Netflix, Apples, Teslas of the world. When I captured this chart today, right here, the QQQ was trading at $599 and change. Certainly down from last week's all-time highs up here at 637. So now we see, like the SPY, the Qs are trading below the 20-day right here, which is coming in at 614 and change, and the 50, and it slid right, just sliding below its 50-day moving average, coming in at 601. And if we do look down here, we can say the 200-day moving average coming in at 539 and change. So we can look back quickly here at, look left with me back to the April lows here, April 7th low. The Q certainly had that, came down to 402, then rebounded like the SPY and many other, many assets did, come back up here above its 20-day, above its 50-day, above its 200-day. And like the SPY, the Qs pretty much walked up their 20-day moving average for all of the summer months up here, all the way to October. It came below the 20-day a couple of times, but not below the 50-day. This has been a really good uptrend for both indices. Very, very bullish. Came up here. Then in October, just like the SPY, started giving up a little bit of the enthusiasm, but then moved back up here again, and a couple of weeks ago, up to the highs at 637. And from this April low to the highs at 637, that's a 49% gain. So nothing we can complain about. So now what do we have here? Well, if the Qs fall much lower below the 50-day moving average, then that may offer resistance when it turns around to come back up. Again, we have the 20-day moving average. You're coming in at 614.98, call it 615 if you want to. And of course, all the way up to the highs at 637 would potentially offer some resistance when the Qs revisit that level again. Now, we have the, as far as support goes, if it goes below the 50-day, much more. We have the August and September pivots coming in here at 552 and 559. We have the 200-day moving average coming in here at 539. So we do have plenty of support here, potential support should we need it. We also need to remember earnings season continues next week. So please just consider firming up again your protective stops. Our final chart today is a daily chart of the S&P Select Sector Energy Spider Fund, the XLE. It has 22 holdings. Top holdings include ExxonMobil, Chevron, ConocoPhillips, Williams & Company, and EOG. Now, when I captured this chart today, the XLE was trading at $89.04. Now, it's trading, as you can see here, it's trading atop its three moving averages. The 20-day down here at 87 and change is inverse to the 50-day, which is a feature of the market trading here in a range. but it's okay. And the 200-day is down below. So the 20-day is coming in at 87 and change, the 50-day at 88 and change, and the 200-day is down here at 86, almost $87. So it's just right here. Now, since we can look left on this chart like everybody else, the XLE had an April drop down to about 75, but then it made a subsequent climb up here, up to, in June it made a climb up here to 90, then consolidated through the summer months here, between about 84 and 90, so traded in a small range here. Then broke out here to, I've lost my place. It broke out to about 93, and then right here, it broke out to 93, so it broke out of that, it broke out of that range, broke out to 93, then consolidated on top of the 50-day and the 200-day moving average, and popped up again a little bit here. This was the breakout to 93. Sorry, getting turned around here. Okay, then pulled back in October, and a lot of the market pulled back a bit in October, and then moved back up here to walk along like it is now. It's 20-day moving, 200-day moving average, 20-day and 50-day. Energy usually trades separately from the broad market. I like that. And I've seen a couple of signals recently that energy could be a good place to think about. So in the coming week, if the XLE can stay above the 20-day moving average, which is again coming in here at $87 and change. So if the XLE can stay above the 20-day and above 87, and if the market's behaving reasonably well, although as I just said, energy trades independently of the broad market most of the time. But if all this stays looking good above these moving averages, I will buy a small position of the XLE in my trading portfolio. And I'm going to put a stop down here below the 200-day at $85.94. $85.94 is my stop. Now, if and when the XLP rises and closes above 93, I will add to my position, and my stop will be a trailing stop. So you may want to keep an eye on the XLE in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. And also, please know, we had some problems with our website, ToniTurner.com, and the training programs, but those problems have all been solved. So we hope there hasn't been any inconvenience, but everything's back in good shape now. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my training program, How to Bottom Fish Like a Pro, you'll discover a simple yet profitable strategy that all traders and investors want to know, which is quite simply how to buy low and sell high. I'll show you an easy-to-learn step-by-step process that tells you when to enter an undervalued stock, how to manage the position, and as you see certain signals that the uptrend is about to end, when to take your profits. Now, our new low price for this program is only $199. And by the way, some of my trainings here are priced at only $59. I'm looking at this one. This one is, and this one is for sure. And 3 winning setups has definitely been fixed, by the way, if that caused anybody a problem, but it's all good now. When you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you'll have unlimited access to learn at your own pace. So from our ever-popular 7 Steps to Successful Trading to How to Swing Trade Successfully, very popular program, How to Trade the Trend to Profits, one of my favorites, How to Read Charts, great for novices, 3 winning setups, great for novices, and How to Bottom Fish Like a Pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on the screen up here, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.